You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That super funky tune means it's time once again for TWIFO, This Week in Futures Options. As the name implies, this is the program where we break down what was moving, what was shaking in this crazy, ever so crazy week of commodity action. Maybe a little bit of metals, maybe a little bit of beans, maybe a little bit of rates with the non-farms, maybe some FX, stir it all together, and you got the bubbling cauldron that is TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network. 15 programs for you guys to check out, including, of course, all the great archives of this program, This Week in Futures Options, as well as our other recent addition to the network, a little bit sillier, the business show. So if you like some generic business news mixed up with a dash of nonsense, that's a good program for you. You can find all the archives of those, as well as every other. We have thousands, literally thousands of episodes of our 15 programs for you guys to choose from. The best place to do that, of course, the mothership, the flagship, theoptionsinsider.com. Surf around, click on some articles, some headlines, some breaking news on the options market, and of course, stream or download your favorite programs. You can always also subscribe via iTunes or TuneIn or Stitcher, wherever you find your favorite podcast programs. Or, of course, just grab our mobile app, and then you never have to do anything else again. It's all baked in there. You can download them. What's cool about that, you can download those if you're going on a plane or somewhere else you don't have connectivity. You can download a few episodes to have in your back pocket, quite literally, for that nice long flight. Learn about some volatility, some corn, some silver, whatever is going on in the program you're listening to. check it out via the app. And of course, however you check it out, whether you're downloading or streaming, whether of course you're listening to us live, where we stream the program live via Mixlr, MIXLR, every Friday, 3 p.m. Central, 4 p.m. Eastern. So if you're listening live, you can also tune in via the Mixlr as well. And of course, ask questions via the normal platforms, iTunes, or excuse me, the email, the social media, all that fun stuff. No shortage of ways for you guys to get in touch with the program, make your presence and your questions known. And speaking of being made known, let's tune in, let's join up with my cohort here, my futures options partner in crime, the founder of Bantix Technologies and the creator of a little platform we like around here quite a bit called Quick Strike, Mr. Nick Howard. Nick, welcome back to the TWIFO program, sir.
Hey, glad to be back again. Looking forward to talking about some new stuff this week.
Nick sounds a little bit different. He's beaming in remotely from a soccer field somewhere out in the great beyond outside Chicago. So we'll try to keep his signal up and running as we move into some of the hot product categories of the week. I'm just going to call an audible here, Nick. We're going to dive into a product. We don't believe we've discussed this product on the program, on the TWIFO show before. That's why I like the show. We can kind of just mix it up on the fly and dive into some of the shiny stuff, but perhaps not the shiny stuff people may be expecting, Nick. Let's talk silver instead. No, we're not hunting werewolves, even though that would be a cool show. No, we are instead talking about just the crazy couple of weeks we've seen out there in the other shiny stuff. We're hitting levels now pretty much not seen since way back in August of 2014, so nearly 2 years ago now. We're seeing a lot of action, of course, in the front month, as you might expect, given all of the just very near-term activity. About nearly half of silver activity over the past week, of course, active there. By the way, I didn't mention at the top of the show, if you want to follow along with Nick and I while you're listening to the show, maybe you want to use it throughout the week. It's available all week long, too. Head on over cmegroup.com/TWIO, TWIO, and you can get access to all this stuff completely free and follow along with these reports. Make your own cool report. Check out whatever products you want over there on the platform. It's pretty cool stuff, and it's quite literally only available there and via the Quick Strike platform. So check it out if you are so inclined. And again, the leading charge, the winner of the week for silver this week were the 21 calls out there in August. People just could not get enough of them, Nick. The numbers here in silver are always going to be a little bit smaller than something crazy like a gold or something else, but still about nearly 1,300 of those bad boys lighting it up this week, which for silver is pretty robust. Open interest also pretty strong, up about nearly 8% this week. So pretty active stuff. Nick, as I said, we haven't talked about silver a lot here on the program, but it's an interesting product category and certainly one that's pretty interesting. I did mention the skew as well. It's getting pretty bid up to the call wing. Again, cool tools you can use on the Quick Strike platform there to really dig in to how the skew is shaping up. And not surprising given the upside move recently. People love themselves some calls out there in silver, Nick. So what's catching your eye from the soccer fields in the realm of silver, Mr. Nick?
Well, you weren't supposed to give away where my location, but I'll do the best I can, and hopefully there's not too much. It's kind of windy out here today, but I got it covered, and I think we're okay. I thought it was worth talking about only because, since the beginning of June and really since just prior to Brexit, we're up 25% in the silver. So that's pretty significant when you think about it. I mean, 25% regardless of where it is, but we're also seeing highs that we haven't seen in a long time. So I thought that, like we talked about, it might be interesting to take a look at it. And some of the other things that we have available, there's also the opportunity to look at a tool that lets you see what the standard deviations are with the current volatility in a particular product. So for silver, the range is fairly wide right now. That front month contract has a vol of, let's see, it looks like a vol of about 30%, almost 29.25, 29.5%. And that gives you a strike range from like 19 to 21.5. So we saw some 22 calls trade this week. And that was about, and again, like you mentioned, not huge volume numbers, but when you start to double open interest with a strike in any product, it's worth noticing or mentioning. So 22 calls traded out there, and a $4 run up since the beginning of June, and I think that you're going to see silver, at least what I've been seeing and reading, it might follow along a little bit with gold. They were both sort of steady today, but we'll keep an eye on it. And like we always talk about, we look at the 25 delta risk reversal, which is the 25 delta put and the 25 delta call. And those continued over the last couple of weeks, flat about 3 weeks ago in terms of increases, but it looks that the calls have gained some volatility here over the last 2 weeks, as you would expect. So it was we were in sort of a little bit of a trading range when it came back off down to 16 and then rallied back up here over the last several weeks. So more upside, definitely a tilt in the curve when you look back to the beginning of the month. So something else to keep an eye on and see if there's anything interesting that happens here. See if it follows along where gold is and even got some 30 calls trading out here in the September contracts. So, that's a fairly significant, and even as far out as D. So when you start to see those kind of things, people are, looking and maybe thinking, we could have a run up here if gold continues to be in fashion and silver's going to be in fashion. And I was watching, you can even take a look at the platinum. That's up quite a bit as well. So, like you said, we look at a few different things and see if there's anything interesting out there. And it's sort of the point of the show is to draw attention to some products that we might not necessarily see that often.
Yeah, I like the chance to mix it up a little bit with some silver here. Let's also dive in, since we're talking silver. You can't really talk one without talking the other, so let's also get the gold bugs covered here with some gold talk here. If you listen to our Volatility View show that we streamed earlier today here, we got into a lot of the action we're seeing out there, mostly on the GLD side of the fence, so mostly on the ETF and ETF option side of the fence. And if you heard that show, we really broke it down in terms of upside is where the action is out there, all calls pretty much all the time, all the options skew really leaning heavily toward calls being of interest. And now flipping the script out there to the big COMEX gold futures options contracts, we're seeing some similarity out there to the gold calls pretty much leading the charge, as you might expect, given the moves we've seen over the past week again out there in gold. Metals, of course, been just rocking and rolling here post Brexit. And again, with so much action happening this past week, 53% of the volume this week going up in that front cycle of the August, not surprising. And relatively more modest gains in open interest for gold, only about 2.5% or so over the past week. But again, you're talking a lot more volume out there in gold than you are in silver. So it doesn't take a lot. It takes a lot really to move the needle out there versus where it's silver, where it doesn't really take a lot to really bump those OI numbers quite a bit. And again, overall seeing interesting stuff out there in the gold 25 delta risk reversal skew. I've seen the puts actually getting a little bit more life now, but it's still pretty much all calls all the time out there. And whenever you're talking skew, it's kind of that weird dance, as you've said before, between the puts and the calls, which wing is moving the most, which is having the biggest volatility impact. That nets out to be your skew number. Maybe we should dive in. Are you still calling it the quick skew over there, Nick? That kind of that cool graphing tool that shows you how the two wings are moving independently, or have you arrived on some other branded term for it?
No, we're going with quick skew, and I think we actually just put the trademark paperwork in for that as well. So hopefully we'll be releasing that fairly soon. And one thing to mention too, the silver, if with the quick skew, meaning the percent difference between the at the money and the call and or the put, and the actual difference between the percent difference between the call and the put, that's the widest that has been in 5 years. So that's, again, some interesting things to take a look at and for some things for us to keep an eye on. As far as what we're seeing here in the gold, we're up about 27, 28 bucks this week. We see a little bit of a flat, I think more, we could call it more flat. There's still skew on the call side, but I think we can call it flat in terms of the interest. And if you go out there and look out on all the different liquid contracts, and again, you're seeing most of that is taking place from August to December. You're not seeing a lot of strikes above 1,500 trade very significantly. So I think as much as people are looking at this, still as the flight to quality, where we're going to go if we want to get some return, if there's a problem with the world's infrastructure in general. We saw people running out there to purchase the gold, but not a lot of crazy strikes trading in terms of being too far away from where we currently are. So, we traded up. We're off from where we were on the highs for the week, but
nobody was really reaching for anything. And when you look at it from, I still like the put call ratio, both from a standpoint of looking at the open interest as well as the volume. So calls did lead the charge for the most part this week. But like I said, they were really more within line with, 1,300 to 1,400 range, nothing crazy outside of that. And then overall, we're still looking like the open interest has, outside of the front month, where it's pretty flat in terms of which direction. Again, you're going to see, at least I think you're going to see most of where people think the short-term direction is when you look at the open interest from that first contract. And that still has 18 days to expiration. So that's a significant amount of time from a trade standpoint. But when you go outside of the front contract, you're seeing that there's a bias towards open interest in the call. So I still think there's an upside bias in that contract, as well as, just some good trade in the August contract. So again, seeing increases in the open interest. And if we didn't mention it, there was, 3 consecutive increases in the silver open interest, like 12%, 50%, 60%. Here in the gold, we have another 2.5%. We were up the last 2 weeks. So again, like you like to say, the shiny stuff. We now, instead of just one shiny thing, we have a couple shiny things to keep an eye on, and we'll see how it goes from here.
Yeah, the werewolves out there in our audience better be aware, because I think we're going to be talking silver for a little while. Nice change of pace. I mean, not that I'm tired of gold by any means, but it's always nice to mix it up. And I know you guys over there at Quick Strike, Nick, are looking to add a lot of even some of the less shiny metals, some of the more industrial stuff, the ferrous stuff, the base stuff, all that kind of stuff. So who knows? We may be getting even more hardcore into the less shiny metals as well. See some interesting activity moving there. But speaking of things that are moving, we can't do the show today, Nick, without talking about the big mover, the big shaker of the market today. That was, of course, the non-farms number, probably one of the more significant non-farms we've had in a while, just given the context of where this number is coming off. We're, a week or so post-Brexit. We're still kind of digesting all of the madness. It seems like an eternity ago, Nick, that it was just the last FOMC meeting and everyone was debating, will they, won't they, with Janet Yellen, will they raise? And, of course, they came out on the no raise side of the fence, and then Brexit kind of put the lie to any chance of a raise, really, and then people were pricing in actually some decent probabilities of rate cuts in the near future, and now, lo and behold, here we have this non-farms number that sets the market pretty much off to the races again. And here we are from a broad index perspective, equity index perspective. We pretty much regained all of the losses we've had post-Brexit back at or around the highs of the year. Broad equity volatility is coming off quite a bit as a result of this non-farms number. I know you're an old school Eurodollars guy, Nick, so you pay a lot of attention to the non-farms. What caught your eye in today's number and some of its impact we're seeing across the rates complex in particular?
Well, I think what you're going to see outside of, or what you're going to hear in the background here, potentially some noise, but the number was up fairly big in comparison to the consensus that was out there. Now, when you start to break it down, and I was listening quite a bit this morning to try to keep an eye on what exactly was happening, that this big number today sort of helped ease how poor the number was from May. In fact, we talked in the past about how the May has generally gotten revised up, but this time it got revised down. So the people out there were talking about how the 3-month average was about 150,000 non-farm payroll additions over the last 3 months, which sort of flattened things out and made people, a little bit more comfortable with things. Over the last 12 months, it's 190,000. And just the general unemployment rate creeped up from 4.7 to 4.9%. Now, what does this all mean? People are going to keep an eye on that to see what the Fed is potentially going to do. It still looks like there's not much going to happen in terms of, another quarter to a half over the next 12 months. But an interesting thing that I heard today, and somebody put it into these terms, with the Fed actually stopping the QE, the quantitative easing, they've really been tightening for the last year as well. So it's one of those things where you could say, well, they're not tightening, but they've stopped the stimuli that they've had out there. So in a sense, we've been sort of making money harder and harder to get. So there has been some tightening going on. So we might not see it from the very practical standpoint of the Fed funds rate being changed, but we did see it from, and I'm sure people talked about this, but I heard it again this morning, so I thought it was worth mentioning. We have seen it that, there has been a tightening. But other interesting things to see from here is that, initially when that number came out, you saw sort of a parallel shift in the
in the yield term structure, okay, in the yield curve term structure. So, it's going to be interesting to see what happens with the short rates versus the long rates, and continue to see if the long end comes down, and it looks like they're not building much inflation into the economy over the coming year. So that's what I think we gathered from the numbers today.
Yeah, crazy stuff out there in the realm of the numbers, of course, and then of course its impact out there in the realm of the 10-year. Like I think, like you were hitting there earlier, big put call ratio out there, particularly in the weeklies on the 10-year. It is kind of a bit of an oxymoron, Nick, to say weekly options on the 10-year, but c'est la vie. We did see some crazy activity out there. Same, of course, for the 5 years out there as well, with some really interesting stuff cooking on out there. Really quick too, let's move on into the FX side of the fence with what's been cooking out there. In particular, still the two currencies of note, Euro USD and the Pound USD. You'll start out there in the realm of the Euro, and as you might imagine, it's been interesting times out there with still with so much noise going on every week. A lot of the activity, most of the activity, over 2/3, still in that front term contract, the SEP there going out with about nearly 70% of the paper this week out there in the Euro USD, again showing a lot of really consternation, a lot of noise at the near term of that curve. The 1.09 puts leading the charge out there in SEP with about 5,000 of those bad boys winning the week out there for the puts yet again out there in the Euro USD. Vol coming off a little bit, but not really, nothing crazy to speak of. Open interest still climbing up about 10% out there this past week. If you flip the script out there to the pound, though, that's where things always get a little bit more interesting, because the pound, of course, even more directly related to all of the Brexit madness. And we've seen an even higher percentage of volume right in that very, very near portion of the curve. About 75% of last week's volume coming in that front month contract there. The big winner out there in the pound, yet again, to come on the put side, the 1.28 strike put with about 1,500 of those bad boys lighting it up this week. And wherever you look here in the pound, compared to last week anyway, a bit of a vol crush coming in, with most of the major months coming in a point, if not more, a full vol point from last week. So I guess, as to be expected, some of that post-Brexit concern, some of that post-Brexit volatility coming in quite a bit. Interestingly enough, we haven't seen a huge shift out there in the skew yet. So the vol is coming in, but the skew hasn't really changed a heck of a lot from last week out there. Open interest still spiking pretty hard out there in the pound, up about nearly 25% just over the past week alone. So a lot of interesting stuff cooking out there in the FX side of the fence. Nick, anything catching your eye out there in FX, or anything else you want to hit on post non-farms with the rates complex? Have at it, sir. The soccer field is yours.
Well, no, I think what caught my eye, especially in the Euro, was just the activity in the weeklies. And we talk about weeklies quite a bit here, in that they should be a fashion. They give people a lot of opportunity to play the market in almost like a cheap future exposure. And it's good to see here in the Euro that you see a pretty big increase in the open interest, like 30% in the front in the 1 week left, 45% in the 2 week left, and then another 45% there. So great liquidity in FX. People are making an effort to trade that front part of the term structure. And for me, when I see that kind of thing, it's always encouraging, because it just helps the overall open interest of that product in general. So the Euro is up almost 15% open interest. The pound is up as well. And as far as the skew, it's come off. It's come off from where we saw it when things were kind of rough and tough, when the Brexit was first talked about, and as they started to really bid up the puts in both the Euro and the pound. But we see it coming off a little bit, not much, still negative, meaning it's still bid on the put side. But I think even though
you look, the futures market is still down, but it's been sort of a trickle down. So I think those currencies are starting to settle in a little bit, and even to the point where people are letting it go down and see how low and see what the sort of the stability point is in each of those. But again, we're going to be able to talk about those for a long time. A lot of opportunity there, and especially like we've been talking about, and we talk about across the whole complex of the CME Group products, is the weekly option. So we'll keep an eye. And one thing I wanted to mention before, because it's sort of a way of looking at just the term structure of the options and how the market's thinking about it, right? So the shorter dated stuff is always going to be an indication of what people think short term, obviously. So you're going to see those ratios might be different than the long term expiration. So still a lot of put buyers in both of these currencies in the short term, especially in the weeklies and in one of the initial front months. But keep an eye on that stuff. Where's the ratio from a volume standpoint? Where's the ratio from an open interest standpoint? And then we'll see how it goes over the coming weeks.
We can't wrap up an episode of TWIFO, Nick, without checking back in on, I think, your favorite product these days, at least recently. You're kind of becoming a bit of an ag head like me these days with all the tumult we've seen out there in soybeans. And so we'll wrap up on soybeans here. The magical fruit strikes yet again here with some interesting stuff. Perhaps not as crazy, but still, the futures have been moving a wee bit, shall we say, over the past week yet again. As you said before, a little bit different story with soybeans, even though there's a lot of activity in terms of very near term. The options activity we're talking about is actually a little bit farther out due to the nature of that product. So it's all out there in the Nove expiration cycle, getting into that kind of crop rotation cycle out there, with about a little over half of the volume this past week coming in that Nove space. And the 1200 call out there in November just lighting it up well beyond anything else, about 3x the next biggest contract out there, with about 45,000 of those bad boys lighting up this week. Open interest up slightly, only about 1.5% this week from a overall perspective. A little bit of an interesting nuance. Vols creeping up again reflecting what's been going on out there of late. Up pretty strongly, actually, about nearly 4 handles in some of the nearer term portions out there. A little bit farther out in November, only up about 2 points from a vol perspective. But that's still pretty hefty stuff. And the skew, a little bit of a mixed story, I guess, depending on the month and the cycle that you're looking at. But we talked earlier, beans have kind of been a weird complex to watch, and we saw so much skew to the calls for quite a while there that it made it attractive to put on positions like collars in particular, because you can buy puts for a relatively paltry amount of volatility and turn around and sell up out of the money calls for a fairly inflated amount, and do those spreads sometimes even for credits. And if you're along the futures or you're some sort of producer, that was an attractive deal for you. So interesting stuff. It's lessened a bit out there, as you might expect, but still interesting nonetheless out there in beans land. Nick, before we wrap up here, what's been catching your eye out there in the realm of the magical fruit of soybeans?
Well, as you mentioned, vol's up quite a bit. You're going to get that. I mean, today we're up 32. So, as of yesterday, we were down or 32 cents. And today we're up, this week we were up $1.10 prior to the open today. So there is activity. There is volatility. As you mentioned, still a fair amount of bid to the calls. And we start to see in some of these, in the November contract, for instance, 1200 call you mentioned, that was a big volume leader. Again, we were up around that strike at the beginning of the week, so that's where a lot of the trade is going to take place. But if you click in and take a look at some of the detail on the active strikes for the week, you'll see that there was a decent amount that traded in a $15 strike, and a lot of that was taking that strike off. So you see maybe some profit taking there, or maybe people starting to think that, okay, we're not gonna run up to the places that we thought we were gonna see prior to another sell-off here. So corn was dragged down as well, along with the beans, and wheat kind of hung in there. So I think I'm going to go out there and say that over the coming weeks or the rest of the summer, we might be talking about wheat. It seems that the products, regardless of whether there's fundamentals or whatever you want to call it, the ones that are trading in a range and that look to be stagnant eventually,
get a kick in the pants, and we start paying attention to those. So saw that with silver was sort of trading in a range, seeing it with the beans before the fundamentals in Brazil and all that kind of stuff, and wheat looks like the one that's kind of been on the sidelines and outside looking in. So let's keep an eye on that and see what happens from here.
Speaking of seeing what happens, we'll have to wait till the next episode of TWIFO to do just that. But before we go, Mr. Nick, I know you guys are always working on little cool updates to the old Quick Strike platform. Again, you guys, if you want to see it for yourself, cmegroup.com/TWIFO. Actually, no, TWIO, TWIO, this week in options. Don't have the F, don't ask, long story. And you can check it out for yourself. And again, you can do it all completely free, which is a pretty cool thing for this level of analytics out there. Usually you got to shell out some cash for it. And Nick's kind enough to make it available for free for you guys. So go on over, check it out. And if you have questions, you have comments how to use it, hit us up. We'd love to walk you through it. And before we go, Nick, tell the people, you have the quick skew, you have all the other kind of cool stuff you've been working on. I know you've been adding, since the last time we talked, you added that cool level of more granular detail. People can click on some of the different numbers, get a little bit more detail behind the volume that we're seeing and things like that. So before we go, anything else you guys are working on that's really cool, it's going to interest our listeners, and until the next time we can all gather around the old TWIFO Yule log?
I think I've been mentioning it all along. We're adding a fair amount of new products, especially in the energy sector. So keep an eye on those being made available over the coming weeks. Probably by the end of July, you'll see some additions out there. And then, like I always say, always good to start at the CME website. Take a look at the free stuff that's offered, and hopefully you find something out there that you like. And then next week, I'll put it in the list. I got a question out on Twitter from somebody. It was Eurodollar related and some of the vernacular terminology of how that gets quoted. So maybe next time we can cover that.
Yeah, we do get a lot of good questions from you guys, too. Sometimes we don't always have time to hit on them because there's so many products to squeeze into a quick half an hour, and Nick only has so much time at the soccer field before he's got to go back and rejoin the action. Hopefully we'll squeeze more of your feedback into next episodes. Of course, you guys can always find this program on everywhere you find the Options Insider Radio Network. Of course, you can also, if you can join us, stream it live every Friday, 3 p.m. Central, 4 p.m. Eastern, via the Mixler. We'd love to see you guys. And on behalf of Nick and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to the show. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.